Hello guys, welcome back to market review. Today's date is October 17. So today, actually yesterday, we dropped down. The Nasdaq tried to engage with the sell side liquidity, but instead it formed equal lows, and then it pumped during the London session, formed the breaker block here, alongside with a BISI, a fair value gap, which led market to trade into the inversion fair value gap. After that, during New York session, it dropped down into the 4-hourly fair value gap, tried to reach up to the highs. It actually failed here at the 25% of that wick, and then we closed inside the 4-hourly BISI. To me, this looks like on the higher time frame scale, it looks like 50-50 to me. I'm favoring sell side. However, it is not certain until this 4-hourly fair value gap gets flipped. But again, gone to my head, I'm favoring sell side first, then equal highs might get attacked afterwards. Now let's take a look at the 1 minute order flow though. As usual, I did not delete anything from my chart from today's annotations, so I'll just walk through that. Let's clean this. Alright, so when New York opened, actually before New York opened, let me just mention the 830 news candle. It formed a buy side wick, sell side wick. The sell side wick did not get manipulated initially. The market tried to came down to the 830 low, but instead it actually swept the internal liquidity and pumped to the upside, cleared the 830 high. Essentially that's equal highs, and it kept running during the pre-market. Right before New York open, let me zoom in a little bit. Right before New York open here, it dropped and formed a 1 minute CB alongside with a bearish SMT divergence. This was right before equity opened. The moment equity opened, we saw a harsh drop. Basically, it formed the CB. It kept going lower, which was very weak price delivery. Basically, the sell side delivery was very strong. Let me just change this all. The reason being is none of these CBs got touched. Every CB you see in the sell side delivery essentially cleared these equal lows here, all the way down to the sell side here. Alongside, none of these CBs got tested. Okay, so it cleared all the sell side without coming or trading into any fair value gaps in displacement. Once that sell side was cleared, market shallowly pulled back into this was premium. Let me see. All right, it went all the way up to the premium here, premium portion of that fair value gap from 935. It couldn't even reach to the first fair value gap of the New York session, which indicates bearishness, and then it dropped down, cleared sell side one more time here. So this was a large fair value gap, but it actually panned out from the open range gap. CE was utilized to go sell side. Then price did more damage to the sell side here. It left equal lows, cleared the equal lows, and then displaced to the upside. Again, the very same fair value gap, which was silver bullet technically speaking, was utilized to go lower again. And here in this price action, the market actually formed equal highs at the highs, and here equal lows. It ran on equal lows first and basically delivered 3 times. This is a bullish 3 drives, right? And it rejected the CE of this wick at 10:10 a.m. right here, which means now we have equal lows on the higher time frame, and this is building up sell side liquidity here, quote unquote engineered liquidity. And from there, market rallied, formed BC and the breaker block here. Let me annotate the breaker block just in case you guys can see it better. So market dropped down into the breaker block, respected it, and cleared all the highs initially, the equal highs, and then it traded all the way up to the first fair value gap of the New York session. Here at the CE of the first fair value gap of the New York session, along with the 4-hourly IFVG high. I need to change this. It stalled initially and then dropped, which caused a SIBI here. Now with that SIBI, we have a jagged move up there. Right there is a jagged move with equal lows down here, which means the market is likely to be in sell model. This is the profile of the sell model. Original consolidation, first stage distribution, second stage reaccumulation, and that smart money reversal here. A market formed, basically accumulated here, formed equal highs, equal lows, and then let me clean this. And then so equal highs here, relatively equal, and equal lows, relatively equal. It ran on buy stops first at 150. This is macro, okay? It ran on buy stops first, basically turtle swooped the highs and repriced very sharply down into sell side / equal lows, going into the 4-hourly open. Here, once it took the buy side or equal highs, it dropped. Now we have a SIBI here. The SIBI, once it was formed, it couldn't even reach to the CE of that SIBI, so it repriced very sharply to the equal lows. Now this could have been double purge, okay? So basically accumulation here, buy side first, sell stop second, and then run on buy side liquidity. Could have been that, but this is the trick. This is how I know that it's going to be a continuation or it's going to be a sell model. Okay, first things first, we have a jagged move here, smooth edges here. Okay, that's the first indication. The second indication, once the sell side liquidity was engaged here, okay, look at this candle here. You have a volume balance there, another volume balance down here. Essentially this wick is a fair value gap. Okay, as I annotated this as silver bullet just because this is happening during 2 p.m. In the afternoon session, and once it displaces below the equal lows, that indicates that this is in fact not a double purge, but it is a market maker sell model, and this turtle soup up here is the second stage redistribution on the market maker sell model. Okay, so at 206, price traded up into the silver bullet fair value gap, dropped down. This is an order block once the price moves away from it. Let me annotate that. Price traded up into the bearish order block, essentially immediate rebalance, and then came down, traded up into the volume balance here. This is essentially a fair value gap, and then it dropped down, took out the sell side liquidity here. It engaged with the sell side liquidity. Okay, for the order flow though, so the order block could have been used as a short. The silver bullet could be used as a short if you have enough. I mean, I wasn't watching the price at this point, but this is a very good short, low risk short because of the equal lows. So here, the SIBI was retested. I don't like to use that word, but the SIBI was traded into, then price moved away from the up close candles and formed an inversion fair value gap, dropped further. There's another SIBI here, traded up into that SIBI and sold off one more time and cleared the market maker sell model completely. Okay, let me clean this. Took out the sell side essentially here, and the market maker model itself is this. Okay, once it takes out that low, the market maker sell model is completed. And then obviously the market established a dealing range on the sell side of the curve, which is from the buy side, from the manipulation high all the way down to the low that cleared the sell side. This is the range equilibrium. So price retraced all the way up to the premium. It just wicked above it, and that wick is actually for a specific reason. The 207 candles high, doesn't have manipulation or doesn't have a buy side wick. Actually, is it? Does it? Yeah, it doesn't. So price tried to go up there. It couldn't even got up there, which indicates even more bearishness. So from that premium area, market has to reprice down into the sell side again. This is essentially a 1 minute market maker sell model continuation. So it goes all the way up to the buy side. Along the way, it clears equal highs here and this minor buy side. Once it engages with the minor buy side and trades into the premium fair value gap, it displays to the downside, as you guys can see here. Then we had this volume balance and fair value gap here. It retraces all the way up into the inversion fair value gap. This is what I call a deep retracement. Okay, it doesn't have to do it. Deep retracement. Market doesn't have to do it, but it did. Regardless, it could have just gone from the CB here using this breaker block, but it did not do that. It formed equal highs here. I was waiting for that to get cleared first before the drop. It didn't though. Instead, it formed these equal highs here. That was also bearish SMT divergence. So with that equal highs, it dropped and formed a CB here. That is a short entry. Stop loss at equal highs, unfortunately. Not the best trade, but it's what it is. I'm sure this was cleared on micros, but this was a good 5-hour setup. So the price traded up into the CB and then went all the way down to the minor sell side, formed another CB here, retraced up into the lower portion of that CB and dropped all the way down to this Wix CE. Initially here it reacted off of that CE, but we have a CB here. That CB was respected, thus the market dumped one more time here and cleared the second stage redistribution on the 1 minute. Okay, and along the way with this distribution, it left this equal highs and this equal highs here waiting to get cleared. I'm not sure if it was cleared already, but I traded this. But here's the thing I'm going to mention. The last fair value gap here, once it got violated to the upside, the sell side was completed. Essentially, it started the retracement, as you guys can see here. So we got an inversion fair value gap. That market essentially formed equal highs here. Then it dropped, cleared the internal range, sell side liquidity, pumped one more time. Now it's building up even more liquidity here. We have now 1, 2, 3, 4 equally highs, and then it came down all the way down to the 50% of the latest wick, sell side wick here, and along the way it cleared the internal range liquidity. Now we have 3 drives there, along with sell side, engineered sell side here. Then it displays to the upside, cleared all the equal highs, and then pumped even further and closed the market there. Now I'm looking at these equal highs. It's probably gonna get cleared going into tomorrow or during the overnight session. But yeah, very eventful session today, I would say. Overall, we had large drop, large pullback, large drop, large pullback, and a large drop again. So it was tradable. It was tradable. The main point is though, this area right here. Okay, this is the main thing you should be concerned about and you should be trading. And this right here. Okay, this is another trade to the sell side here. All right, these two levels, or these two price action, and maybe this one here right here, these three price action should be your main concern, and the rest you should be just letting it go. Why? Because you will get chopped, period. If you try to trade this accumulation, you'll get chopped. You'll think, oh, this is equal highs, the price is gonna go up there. Or once it forms a CB here, just like there, you'll think, oh, it's gonna go for sell side, but it just engineers liquidity. Once you see prices engineering liquidity, equal highs, equal lows, just wait for one side to get cleared, and then fade that move. Okay, that's the main point. So you got to be patient. But yeah, going into tomorrow, like I said, I am favoring sell side. I might be wrong about this, but for now, I'm thinking about sell side delivery on the 4-hourly. The confirmation, there's no confirmation just yet, but the confirmation would be the 4-hourly BISI getting failed, or basically turning into a fair value gap, inversion fair value gap here. If it turns into an inversion fair value gap, I think I can see something like this for tomorrow, and hopefully for next week we'll clear these October 1st lows. We'll see though, this could also get invalidated. So if we see another rally from the inversion from the 4-hourly BISI, obviously the equal highs will be first. But again, when you have equal highs, equal lows at both sides, don't try to trade in the middle. Okay, the high probability trades will be once one side gets cleared. All right, now we have a bearish SMT at the highs. That's kind of giving me more influence to the sell side also. And because this is a 4-hourly market building up liquidity, it is actually tradable on the 1-minute time frame, basically for base hits. Other than that, I think that's all I'm gonna mention today. Hope you guys find this insightful. I'll speak to you tomorrow in the morning session. I'll be live streaming on Friday, and hopefully we'll get good price action and make some money and close the week strong. Thanks for listening to me, watching this video, and I'll talk to you tomorrow. Have a great rest of the day.